Okay, so how to design your trades is the session today, right? Since we are here, I assume that we have some way or the other we have traded in the market, and more or less it has been a pleasant experience, right? Maybe you would be having good trades, bad trades, good days, bad days. But today the topic specifically is how to have a structured way of doing trades. Uh, Markets are very haphazard. If you look at the price movements across time frames, across instruments, futures, options, so it is a lot of mess actually, and we need some structured way to look at the markets and to trade it. Are you getting my point? Like there is a lot of random movements. Many people are buying, many people are selling. So we need to remove ourselves from the market, have an overview, and then decide what we want to do. And in doing so, this how to design trades, this session will really help you. This is the point. Okay. Many people are still complaining I'm not audible, guys. I'm audible to most of you, so please understand the problem is not from my end, right? So you can log out and log in again. Uh, that's the best I can do, right? Okay, moving ahead. This is a customary disclaimer. Trading is risky, and it is inherently risky, and there is always a risk of losing your capital. So you should be aware of what you are doing. Many people subscribe to call services without understanding what is the implication of that particular trade. So, right, this is the disclaimer. Nevertheless, let's move ahead and see how we can have a structured way, a proper way of going about a trade, right? So in one of the earlier sessions, you must have seen, many of you would have attended also, the first thing that starts when we look at the price movement or we look at the chart, we try to understand what is happening in the market, right? So in that context, the first thing that we should be aware of is how are the prices moving, right? With that, what I intend to convey to you is we need to understand whether the prices are moving up every day, they're moving up, or they're moving down, right? So we need to identify what is the trend. Is it an uptrend? It is a downtrend, or it is trendless, right? So there are basically three types of trends. Just to have a look at it, I have already covered in detail all this, but just for a small summary, if I look at this price movement, here is Nifty 50, right? So from here, this point to this point, the price was in a uptrend. From this point onwards, there was a minor downtrend. Then again, it resumed its uptrend. So if I have to look at this price chart from starting this, the time is 332016, right? 3rd March 2016 to this. Overall, I would say it is in an uptrend, right? The price is uptrend. The major trend is up. There was one minor downtrend, right? So we need to identify what is the price doing on the chart. If I look at Nifty 50 right now, I look at like this. I've opened this. There was a peak which it formed. It was 29th January, and after that it came down. So it has been in a downtrend, right? Is it clear, guys? Quickly, keep giving me responses so I know that I'm getting across to you, right? So this was in a downtrend. Now if I have to look back again now, currently what the price is doing is, in the short run, you can see here, in the short run the price is moving up, right? So I need to identify what the price is doing on the chart. it is in an uptrend, downtrend, or a trendless market. So I've remarked it many times, you know, the prices are in a trend only maybe 10 or 15% of the times, and it is a trendless market for majority of the times. You know, within a trendless market, you can find small trends, right? If the price has been moving between two ranges, let me find a range. You know, maybe I can say that this was a range here. Not a good example. Yes, I know one stock which was in a range for very long. You know, this, even I was trading this stock. Yes, so you see this on the price. I've marked this resistance level long back. Okay. Okay. Should go. So this, if you see here, the prices were in this range for so long. So major trend, if you see, is trendless, but within that, few uptrends, downtrends, uptrends. So it all depends upon how you are looking at the price, what time frame you are looking at the price, right? And what is your time frame of the trade? Always I remark, you know, when I get queries is what is your time frame? And I've covered this in previous session also. If my time frame is from, let's suppose, 2017 February to 6th July 2017, so the market was flat for Hindalco. You know, it was one uptrend was developing here. You know, at this point I came to know that there's going to be a breakout because higher lows, higher lows, higher lows it was making, but otherwise it was a flat market. So if I had a time frame of 6 months maybe, so this stock was not going to give me any returns. So this is the fact. So I need to identify what is a trend, right? Am I clear till now? I've just talked about the basic, what is a trend. Now within that trend you can have three types of trades that you can take, right? This I'm sure would be available in many of the technical analysis book. What I'm doing is I'm going a step ahead, which will not be available in the book, and that comes from my personal experience, right? So once you have found a stock that you are interested in trading, you know, the stock is in uptrend, downtrend, or maybe trendless. So what trades that come out of this is, either it can be a continuation trade, you want to go with the trend, you know, it can be a reversal trade, you think that the trend is coming to an end and now it's gonna reverse and you are going to bet on the opposite side. And then there is one contra bets. This contra bet and reversal, they are two different things. Maybe it may sound the same and it may be confusing, but the reversal trade is when the main trend has reversed, right? In the contra trend trade, what we do is we are betting against the main trend for the only sake that the price has moved too far and some pullback or some retracement is expected, right? So there is a difference between reversal and contra bets. And when you go to the options side of the trades, not even futures but options, this contra bets, you know, the price moves 5% in a day, the options will move 200-300%. So that is the potential. And when it moves, you know, the prices suddenly jump, and then you start betting on the contra trades, that because there was a huge rise in the price, the prices are going to stabilize, and once they are going to stabilize, the option prices will fall dramatically. So this is what a contra trade is. This is applicable to all the segments, cash, future, or options, right? So we need to identify that we have a trend, the prices are moving. Come back to the chart. Let's suppose Hindalco itself, I am here, right, on 14th August 2017. I am somewhere here. Now I know that there was a resistance break and a new trend has started, right? From the flat, I am expecting it is an uptrend. my initial idea is it is an uptrend. Then I would look at the other indicators and confirm that, right? So what trade I'm going to take? Maybe I will go for an continuity trade, continuous trade, continuation. Or maybe at this point, my indicator, you see the indicator, stochastic RSI, it is telling me it has come into an overbought zone, right? It is an overbought. That means the prices have moved in respect to the previous 14 days too much in this direction. So there is a possibility of a small reversal. So that possibility I can trade. So for the confirmation, I'm going to the indicators and not for that deciding the main trend or trend direction, right? Am I clear, guys? Could you guys give me some response? Still I'm getting many people saying that I'm not audible. Please give me some response. All right, then I move ahead. Anyways, people who are not getting, it will be available on YouTube for sure, right? So let's just not disturb the flow, right? Okay, so there are three types of trades now: continuation, reversal, or contra bets, and that will depend mostly on the time frame, right? I'm going for the trade maybe for next, like I said, the swing trades, 3 to 5 days. Maybe I'm going for an intraday. There's a stock which has just, on the daily, it has come to the support levels. So for the intraday, I'm expecting a small jump. This is what my premise is. This is what the story I'm making. You need to make a story for the price. So my story is the prices may retrace a bit because it has come to a support zone. It is not sure. I'm not sure maybe it will do or not. For that, I'll go to the indicators, what they are telling me. But I have to make a premise first, right? So this is what the type of trades is. Now I have decided everything. The trend is clear to me. What kind of bet I'm going to take is clear to me, right? What comes next? Then you have your trade method. First, you have a method. Already we have talked about identification, trade direction, right? Then what I'll do is I'll identify what are the major buy and sell zones. Many times I tell you guys, to people who have been interacting with me on personal basis also, if you are a bull, think like a bear. Why? Because I should be aware that I am holding a position which is long. At what level is the bear power going to come in, right? At what level? If I'm buying here, just have a look, guys, you may get some good information from this. If I'm buying here, right, maybe my premise was stochastic crossover or MACD crossover. This is what my buying is, and the prices start moving up and I get an EMA, right? I get an EMA line somewhere here. EMA lines and moving averages lines are mostly areas where the bulls or bear power will try to shift the price in their direction. They become a moving resistance and moving support areas. So I need to be aware of around this point how the price is behaving. Just like here, if you see, the prices are in a downtrend. I'm short on the prices. They're coming down. This blue is a 50 moving average, right? At this point, there is some reaction. So there is a buying power which has come into. Immediately I should know that, because the price is reacted to a level, this is where my target has to be. If I'm a bear here, I'm selling, I would look at the level where if I was bull, where that I would be buying. So this is the level where I would be buying. And there is some reaction, and then again the prices continued downtrend. This we have covered in the Fibonacci series and support resistance classes. The YouTube videos are available. Just for the sake of this particular argument, I guess this much is enough, right? So we need to identify the opposite party. If we are a buyer, what is the seller going to do? At what level he is going to think that this price is a good price to sell, right? So this is the psychology behind when you are going to trade. And we need to be sure about what are the major corporate events that are lined up. I am long on some stock, maybe ABC stock, I am long. And in 3 days there is going to be a result announcement or maybe some merger news announcement. We are sure most of the times what happens is all that is reflected in your price. There is no problem. The price says everything. But in case of any unexpected information or unexpected event, like there was an event about trade war last week. There was a small announcement of China, there was some rhetoric they were passing across. So that may have a response, may have a reaction on the price movements. So always know that the technical analysis cannot replace fundamental analysis. If there is going to be a fundamental change, then the technical analysis, your strategies will fail. So right, some major corporate event, if it is lined up, I should be aware of. So this is where you have to keep yourself updated about the company. Most of the times may happen that some unexpected news is anyways going to come, because these are all played a lot. People, insiders, they do that a lot. General public may not have that particular level of information. For that, what we do is we use the stop losses, right? We'll get into that, why a stop loss is required. So this much is clear. We need to identify an instrument which we are going to trade. We need to find the trade direction, what we are going to do. Maybe identify where the selling and buying, this is support resistance basically. Selling and buying is supposed to come. And one major problem, with people, novice traders, I would say, or new traders, they do is they simply start marking the lines. There is a trough, so it is a support. There is a peak, so it is a resistance. It does not happen that way. It does not work out that way. If all the support resistance lines were to hold, we would have never seen any breakout. Most of the times they hold, but there is a logic behind that. What is the logic? Whenever you are approaching a support line, you need to see whether the down move is slowing or not. The buying is coming into the market or not. If I'm having long candles when I'm approaching the support lines, definitely it is going to cross, because some smart ass would be thinking, this is a good price and I can take out all the stops that the longs have created close to the support lines. So this is a mistake. So more on that some other time maybe. This is not the right time because I have a lot more to cover. But this is it. Simply you cannot just start marking lines on the chart and you expect that they will hold, because the lines which you have made, the other person may not be agreeing to that lines. The supports which you mark, the majority of the market may not agree with you on that level, right? So this is it. Next is this, I have found this chart today. It was there in my Twitter feed. Do you think this is required? These many ABCD chart patterns and all the fibs, positive, negative. There's so many fibs and there's so many. You cannot work like that. Markets are continuously changing. You cannot work with such a complicated chart. Always keep it simple. Always keep it simple. There are 3 things. Do it. The long-term trend. Decide. If you are trading a daily chart, we have covered it earlier also. I'll cover it again. If you are trading a daily chart, your trend is decided by the weekly chart. What is the trend of the weekly chart? Once you have decided the trend of the weekly, then you look for entry in the daily. On the daily, how you decide your entry? We look for pullbacks where we are getting a discount. If there is a breakout, I've earlier also have said, if a price just breaks out, I'll give you one example. Let's talk with an example. There was a there was a breakout in this stock recently, right? This is irritating. I'm sorry, this is not going. Just see what I can do about it. All right, yes. Guys, keep giving me responses, otherwise I'm not sure if I'm getting across to you or not. There was a breakout in this stock. Can you see? On the weekly, it is more clear. I will mark it like this somewhere, right? So there was this, and there was resistance. The prices moved to resistance. There was a resistance. The prices moved to a resistance. There was a small reaction. Can you see? There was a small reaction. So this is a doji, inverted hammer. So you would say, right, the price is going to turn back, but then the resistance was broken. Whenever there is a break of the resistance, it will be a big candle with good volume. If it is not, it is a false breakout. It's a good way of understanding where a false breakouts occur, and they're the most profitable trades. All right, so this is it. If there's a breakout and at this level I'm going long on this stock, what am I doing? The person who has bought here, I'm giving him his profits while I'm taking the risk of it being a false breakout. All right, so what our idea is to long-term trend, I'll get to that. Long-term trend, is your weekly. When you're trading the daily chart, there is a relationship. Again, we have shared it many times. There's a relationship of 4, 5 or 6 maybe. Why? Because one day has 5 hours, 5 to 6 hours, right? 1 week has 5 days, and 1 month has 4 to 5 weeks. So when you're trading a daily, your time frame should be daily and your trend direction should be weekly. Right? When you're trading intraday, maybe 5-minute chart you are trading, so 5 minutes into 5 or 6 is 30. The 30-minute chart will tell you your direction. This is how we trade. So it is not, you don't need so many information on the chart, so many graphs and all. It is not required, and it creates a lot of confusion also. If you see my chart, I would always just have moving averages. I would have one momentum indicator, which is your MACD or your ADX, and I would have one oscillator. Oscillators are RSI, stochastics. So I know how the price has been placed as relation to the previous 14 days or 20 days. This much is all which is required. No more information is required. So we are clear till this point, guys. We have to keep it simple. If there is some pattern which is very complicated and you have found out, it may so happen that other people have not seen it, and they're not going to trade alongside you, and we need the majority people to trade with us so that we are able to push the prices in our direction. That is the aim, right? How quickly we are able to identify that direction makes us profitable. So this is about the method. Next comes your money management. This is the most important part of all this. This is why we design the trades. This is why we design the trades. The other portions, the earlier ones, you could have done on the charts, but this has to be done properly. With the session link which I sent you today, there was one file, Excel file. Whenever you get time, you can open it. I will just go through quickly what that file is. It is from my trades quite some time back, which I had taken, right? So first is, once you've identified your trade, your support resistance lines, you have to identify what is your stop loss. So what is stop loss? stop loss is the level below which if the prices go, you know, that should tell you that your thinking or your story about the stock was wrong. Mind it, stop loss, many people tell you is when you enter a trade, put a 1% stop loss. That is rubbish. Never do that. Your 1% stop, you cannot expect the whole market to respect it. So it is not clear whether the price will ever touch it or not. Has it ever happened to you, that you have decided one trade and then you put in a stop loss 1%, 2%, the prices briefly, briefly just touched it, your stop was hit, you're out of the trade and it continued in your direction. Has it ever happened? Guys, response please. I'm telling you a very good fact. If you from today's session, if there's anything that you can take with you, just take this fact. What is a stop loss? It will help you throughout your life. Yes, so many people are saying, Vishal, thank you, Akhilesh, Samir, Mr. Reddy, JD, thank you. So many times it happens. Your direction was correct. All the analysis was correct. You put in a safety stop, and then the prices hit your stop and then resumed in your direction, leaving you behind. And then what you do is, instead of 1% next time you do 2%, 3%. This also happens. But that is the wrong way. We need to identify, we need to understand why do we give stops. Alright, so stop I'll come back to what a logical stop should be. Just for now, we need to know how much we are willing to lose. This is one thing. How much we are willing to lose as compared to how much the market may take from us based on the logical stop. Right? So there is just for timing, there is one application that we have released, and in that application whatever I'm sharing right now is available in all the other forums, but this is what is convenient to me, so I use this. So right, Tata Motors. So this at the bottom is stop loss. Right? If you see, there is one channel which is running along the prices. At this point, you see my lower stop loss was hit, and then prices, yes, same upside, the upper stop was hit, and then prices kept up. And this, what is this? There are three types of stop losses which you can take. Okay, before we talk about this, let's talk about what is an ATR. We have discussed this also. What is an ATR? It is an average true range on the daily. If I take a daily, so ATR currently is 67.8 on the price of 2430. What this says is ATR 14 is the average move in the last 14 days was 65.8. So at any point on the daily, the closing price or maybe the open price, the next open price, 65 up and down is a normal move, right? That means the original trend direction is not violated if the stock makes this move. Do you agree or not? This is the indicator. We are trying to use an indicator. Yes, so this is ATR, average true range. So if I am going to trade this 2430 on a daily chart, and if my stop loss is less than 68, so here is what mistake I am doing. The price is supposed to do that 65 rupee up and down move, and my stop is already hitting. So that is not a logical stop. What can be a logical stop? See, one ATR, the probability of the prices moving one ATR in a day is 68%. That comes from your normal probability distribution. The probabilities and all we are going to talk about in our options course. Right now, for just understanding, you know, we can take it that 1 ATR is a normal move, 2 ATR, twice the ATR is a highly unlikely move. So if my stop is 2 ATR and that stop is hit in a day, or maybe that level is hit in next 2 days, that means the prices are moving not normally. Agree? Yes? No? I guess I'm giving too much information, right? So if that stock has moved 2 ATR against my direction, that means my direction was wrong and I need to exit. This is a ATR stop. Another stop is the price jumped here. If you see, the price jumped from 20 MA and 50 MA, right? If at some level the prices have breached this direction, that means that EMA is not holding. That means my direction is wrong. Your long direction is decided by the slope of the EMA. We have gone against it. That means my stop loss can be on the daily. If this is 20, 180 are down this. This can be a very good stop. So all this information is what is incorporated already into this. Along with this, there is one ProSafe. This is a calculation which I follow. What this calculation is, I try to see how many times the price, if I am going long, right? If I am going long at this point, because it has touched here on the Bollinger also, if you see up, the price is touching up against the Bollinger. So I try to see how many times in the previous 15-20 days the prices penetrated the last low, right? That is an average penetration into some safety factor. 2.503 is my envelope. So my stop loss will be 334. Personally, I use this ProSafe lower range as my stop loss. I'll show you in the Excel sheet also. This is what I have used at many occasions. And along with that, there is one chandelier stop loss and one PSAR. This is your parabolic support and reverse, as something like that, right? So what it does is, there's a dotted lines. They from the point the direction has changed, they run quickly into the prices. So if the prices are flat, if you see, the stop loss is increasing any day. So this is what PSAR is. This is also very helpful. Personally, I use this 334.5 ProSafe, right? So this was about it. So now what is SL is clear to us. How we use it, there is one ATR one I told you on the chart below EMAs or BO support resistant lines, and one from the iTrade Pro application. This is what my SL is. Now, how much are you willing to lose is a very important question. If my stop loss into the number of contracts I'm trading, that amount is acceptable to me, then I should enter the trade, right? But if that amount is too much for me to bear, and acceptable, by the meaning of acceptable, I mean when I start the trade, that amount is already lost. I take it as it is lost. Does it affect me? If I'm trading a 20,000 rupees account and my loss in one trade is 2,000, that is 10%. That is not acceptable to me. For one trade, 10% I'm losing. No, it is not acceptable. So I will keep somewhere, 2% to 3% per trade is what maximum I can bear. And for a month also, I would keep it as 5% or 6%, not more than 3 losing trades in a row. Always, not more than 3 losing trades. If I've reached that limit, okay, take a break for that month. Study more, understand why it is happening like that, but never overtrade. It is a problem. If you can recall, it is a very common phenomena that you entered a trade, you lost it, and again the prices retrace back, and what you do is you again enter the position. It is called a revenge trade. You're taking revenge from the markets for not proving you right. It does not work ever, right? We'll talk about it more later. So this is what stop loss is. Stop loss is very important. Before you decide anything, decide your stop loss. What is your loss, maximum loss? And then we look at the target. What can be a likely target, reasonable target? The targets again can be, think about it like as the opposite party. If you are a bull, think about it like a bear, where he is going to put in his order to sell, and the power has to come. So if the prices have reached into the overbought zone and I'm long, so I'll look for the candlesticks where they are showing some weakness. So that will be my target and I'll exit. Simple. And then what you do is you do position sizing, right? By position sizing, what I mean is, let's come to the Excel sheet I shared with you guys. In your free time, you can look at it. So here is the complete layout of the Excel sheet. What it says is, here is the type of trades. It is trending trade, breakout, expiry for the options, volatility for the options, support and reversal. These are the type of trades I've been taking. Majority I was trading reversals. They are very profitable. Don't go by the data. This is not complete, right? So what I've done is I've decided how much I'm going to lose on each type of trade. Trending trade 1%, 1%, 1%, and 5% for the month. Just you can decide your own limits, but this is what I do. Then what I do is, this is the month, this was the starting amount, and this is the trade number, script, what was the setup, and corresponding to that, how much I'm willing to lose. Then I come to this, I decide what is my stop losses. This is the stop loss. This is the entry I could get. This is the amount I'm going to lose if I'm wrong. So this gives me what is the maximum quantity I can trade. Yeah, and a likely target. So the likely target is this, and this gives me R, which is it good trade or not. These 0.7, 0.5 or 1 or 0.9 can be a good trades in themselves. It's not going to fail all the time. But why to risk? I should get a good R. If I'm going to make 1,000 rupees, I should be willing to lose at least 500. That's what the logic says. You cannot be correct all the time. So this is what the sheet tells me, and this is what now my plus minus was. And at this level, if you see, yes, R is the risk reward ratio. Yes, sorry, I did not cover it. This is the what I'm getting by what I'm risking, right? So you have this sheet, you can go through, fiddle with it, play with it, and you'll come to see many things. Maybe this I've used for quite some time. I used to record, but then later on I feel I've graduated and I'm not keeping record in this. Plus there is logic. Why did I do what I did? So this is a good record keeping, right? Again, I refer to this. So this is what position sizing is, right? Along with this, what you can also do is, if we are here, maybe we go long, right? At this level we go long, and the prices have moved in our direction. My stop loss earlier was here somewhere, right? I can shift my stop loss and trail it. By what time, what level, so that at any point I'm not losing more than 2%. Keep it a fact. Whatever the paper profits I've got is mine. I take it as mine, and from that level, not more than 2%. If it is going more than 2%, or the logical stop, the ATR stop is going more than 2%, simply exit and take what you have. Doesn't matter. It may go in your direction, but we have traded well. You can not always buy low and sell at the highest. It does not work like that. Buy somewhere here and sell somewhere here. Take your 3-4 points, and take your 1,000, 2,000 rupees profit on an account of 20,000 rupees. Even 1,000 rupees profit is very good, right? How much is it? It's 5%. Monthly you get 5%. Yearly is very good. Just don't think it is like, yo, it is only 5%, it is only 1,000 rupees. You see how much you have put in. You put that amount in your fixed deposit and how much you are getting. So that much profit is also good. We are getting a little more because we are taking more of risk, right? So this is what is about position sizing. So up till now is clear, guys. If you have any queries, now is a good time to bombard me with it. Yeah, some response please, guys. There's a good attendance today, but I'm not getting good response. Am I even audible? Yeah, thank you, Vishal. Yes. Yes. Okay. So does not even if some of the points is not clear, you know, it does not matter. You can always write to me at this email ID which I have given, and I'll make sure that I reply to you. Maybe it will be some small delay. Maybe if you write, it may take one day something, but I'll definitely get back to you, and I'll make sure that your concept is clear. Right. So this is about the money management. So we have seen two things. One is your method, how you are how you are deciding which to trade and what to trade. And there is one question one query I received in the registration form is how you decide. So for this, I have released one application. It is purely up to you. You want to use it or not. But currently in this is what you do is you decide one. Maybe I want to see what is the volume is greater than 5 times the average volume. I'm looking for breakouts. I'll select the script list. Maybe I'll select 3 stocks. I want to see if there was a volume breakout in this or not. Right. So something has happened. Not a good sign. So while it is running in the background, let's just move on. Okay, so this is what is money management, and more important is we need to decide the risk level which we are ready to take, right? Based on our risk tolerance. How much amount if I lose today in a day? If I lose 5,000, am I okay at the end of it? Or I am worried or I feel sad? You need to understand yourself. It is more about understanding yourself, right? Right, so it is more about yourself. What is your risk tolerance? And also, if you look at the screen here, the more you lose, the more it requires you to gain back to break even, right? So like when I started quite some years back, even as 100 rupees or 200 rupees loss used to be something big for me, and I used to think, oh, I've lost this amount, I could have gone to McDonald's or maybe something like that. Thoughts used to come to me. I was trading a very small account, 10,000, 20,000, I remember. And more of it was impulsive trading. There was no structured trading. But then with time, I've grown myself. And if you remember, I told you I was carrying a position of negative 20,000 few days back, and the next day the markets turned in my favor. So with that amount, I was okay. If I lose that amount, because I have seen profits to that level also. Yes, IDFC. Thank you for reminding me, Samir. Yes. So so with that level, because I have got profits to that level also. If I'm at some point I've lost 2,000, 3,000 rupees, so I've got profit of 5,000, 6,000 rupees. So that is how I grow. Slowly and steadily I am increasing my risk tolerance, and if I am at loss, I don't take it personally. I don't disturb myself, and I don't try to affect my trading. My decisions are purely based on the calculations and not what happened to me last time. So this is very important. Once we have reached this stage, what we have done is we have identified the stock, we have identified what type of trade we are going to take with the stock, and what is the money management which we can take with that stock. That then comes is how you are managing yourself. It is your mind. No, when you're paper trading, you identify a stock and say, let's suppose I have 100 shares of this stock, and the stock goes against you to 2 rupees. You're like, oh, I just saved 200 rupees because I did not enter this trade, and then it goes 5 rupees in your favor. Then you say, oh, I just earned 500 rupees. It is very easy to say when you're doing paper trading or you're back testing, but when you're actually trading, your money is at risk. There comes yourself. Then you need to observe yourself, what you are doing to yourself. Are you worried? Are you checking the prices every 5 minutes? Are you just leaving everything as they are sitting in front of the computer? You're sitting at the computer or you're sitting and watching prices continuously is not going to help. If you're like I have already discussed earlier also, your time frame of trading, if it is daily, you don't need to check prices every 5 minutes. You have decided your stops based on a daily chart. Let it play out. And the risk which came out of daily chart, you have accepted it. Every 5 minutes if you test, check, what you're doing is you're ruining your day, and you are bound to take some silly mistakes. Like the price went down 10 points, it came to a break even, you exited. And in future move, it moved a lot in your direction. So you have your ATR was based on the daily chart. So you need to manage yourself. If you see the Excel here, you know, I was trying to manage myself. There was impulsive trade. I saw a trade. I was so stupid that I entered it. So I had written it impulsive trade, and I gave a great D to myself. Right? Then some behavior, okay, more is not documented, but something entry exit is documented. Now what is done is I try to grade the trade. Was it a good trade? Many times it happens, it is a good trade, but the market was not in your favor. Does not matter. Don't give a bad grade to yourself. And then based on this, you decide this table, and whatever trades like reversal trades have been profitable to me. So from 1% risk, you make it 2%, 3%. You increase yourself because you have more confidence in that particular type of trade. But till that time, if you don't have a confidence, risk less on that trade. Right? So this is what this sheet is. Go through it once. I think it will add on a lot of value to your trading. Right? One more thing is, if you see the second sheet, I documented many trades. This is not the complete sheet. Again, I'm saying I documented many trades. This was a USD INR trade. I took intraday entry at this level. I went short and exit at this level. This was a very perfect trade. I could get the bottom here. Right? So this is how I have a 5-minute chart. There was a gap down on open followed by test of 5 EMA. So what happened is it went down, it tested 5 EMA, but it could not cross 5 EMA. So from there I got to know that, you know, the prices are really weak. There are sellers sitting here which will try to push it down. So what I did was I went short. When I went short, wrote some bars here on the 5-minute chart, and when I was getting good profit, I exited. Without even thinking anything, I exited. And then I don't regret, oh, I could have made more money. No, whatever I wanted, I got. So this is how you document entry and exit, and this can be your trading journal for future trades to study. So this is how you prepare this. You should try this once. If you're not able to master it, make it two times, 3 times, does not matter, but try. Right? So always have a realistic target. Always the stop loss amount. Before you start a trade, you have decided a stop loss. Always think that you have lost that amount and then forget about it. If that is actually lost, so you should not feel bad. Right? And then you track your behavior. Look at yourself. Are you anxious? Many times it happens, you know, I put on a trade, if I'm trading maybe option trades or something. So I keep, like, if I'm taking a contra bet, I'm shorting. So the quantity sometimes goes 18,000, 24,000. I'm short, and every tick move is showing a lot of loss or profit to me. So I get anxious. That is not the level of trade I want to take. So what you should do is you should reduce your position. At times you are in loss, no problem. Reduce your position. It is more important to have a sane mind, you know, when trading. Never trade in anger. Never trade with revenge in your mind. Never trade when your day is bad, when you're having trouble in your personal life or office life. Never trade. You need a sound mind to trade and take good decisions. Right? So it is more about managing yourself. There is on the next slide, I'll give you one reference. Right? So track your behavior. After the trade, document, study what went in your favor, what went against you, and it should be an automatic system. Like when you are driving, initially you give lot of control, lot of thinking to gear, clutch, brake, but at later times it becomes automatic. You know that there is a car coming in, what you need to do, right? So trading should be like that only. You see the prices stabilizing, you have a position, exit. Don't think, it should be exit. And more so it is required in intraday trading where you have to take quick decisions. For the swing trades, you get time in the evening where you can decide, right? The same is like with the players, they're playing tennis, so that reflexes should be on their own. And there is one very good book on the trading. If you see, there are not many good books for psychology, but there is one book, Trading in the Zone by Mark Douglas. I would highly recommend you guys go through it. This guy will not even talk about one indicator. No, it is not about indicators or technical analysis. It is more about managing yourself, and it is worth a read. So you go through this book, Trading in the Zone, Mark Douglas. Coming back to again, I'll just show you this iTrade Pro program. How to decide your trades. You know, we have one YouTube video where on the channel where we talk about how you design your strategy and how you backtest your strategy. It is very important. You need good stats. So this is iTrade Pro maybe, right? So let's suppose EMA cross. Okay, we are not taking volume breakout. This EMA 5 greater than EMA 20 on days T is equal to 0, and one day back it was less than. So this is a crossover formula. How this formula you can create, you know, this also a help file is available, but if you have any trouble, you know, you can contact me, right? Okay, and maybe I'll take Nifty 50, 3 stocks. There is one EMA cross in TCS, I remember. So let's just run this. So we are analyzing the EMA cross for all these stocks, and you can have many strategies in this list and so on, so forth. But this is not about this application, so we are not talking much. So you see at this we have got a list. All these are not crossovers, but TCS it is a one crossover. What I'll do is I'll go to this, right? So actually this data is not updated for the last day. This is updated till Friday, I guess. So you see there was a crossover. The red line was crossing the yellow line. So very good. This can be a good trade in if you want to take in TCS. Only thing is there was one gap which was created here. So most likely I feel it will be filled. So this is how you do it, right? We're not talking more about this. We can take it in some other session. So guys, this is how you design your trade. Everything is documented. You have your entries, you have your exit. More important is you need to stick to it. Once you've decided your stop loss, never violate it. Never go against it. Even if you realize you're wrong, just exit the trade. But don't modify your stop losses. Right? So this is all from my side. If you have any queries, we still have time. Those who do not have any query can leave. It's okay. You can contact me anytime, you know. Okay, I'll just write down. So this is my email ID, always available. So you can contact me on this email ID. Any queries if you have, or any sessions particularly you feel, you know, I should hold more, you think I'll be able to help you, I'm always available. All right, so no more queries. Okay, I'm closing this session. Thank you very much for joining. People who have subscribed for the options course, we are starting tomorrow. Thank you very much.